Welcome to the Rule Classroom Plus. This is Steve Barton, and thank you for tuning in. We are going to be taking your questions and asking the expert himself, Rick Rule. Rick, we are in and live. How are you, sir?
I'm doing very well. I'm back from both the New Orleans Investment Conference and then the Northern Miner Conference in London. Lovely to be home, although I certainly enjoyed both events. I enjoyed meeting a lot of classroom participants, both in New Orleans and in London, which was a special treat for me. So, in answer to your question, I'm doing very well. Thank you.
Good, good. I haven't been to the London one yet, although the New Orleans one was a lot of fun.
London can be fun too. That's not the primary reason I went, although I will say my wife loves New Orleans, pardon me, loves London at Christmas season. It truly is amazing. And she told me if I turned down any speaking engagements in London in December, I had to answer to her personally. So,
So you didn't turn them down. Right on. Okay, do you have any opening thoughts? Anything you want to lead off with?
not particularly. I think it might be better to get right into the questions. I'm sort of amused at the ongoing. Um, I don't know how to describe it. The fact that people who are interested in increasing the size of their portfolios seem to be troubled by continuing weakness in resource prices. It's as though a sale at a store that you like was extended for another 3 weeks, and you're complaining about the fact that high prices are about to follow low prices while not taking advantage of low prices. But I think maybe just that brief statement will be the editorial for today. The cure for low prices over time is low prices. The function of the Rural Classroom is to teach you over time which companies are actually low priced and which ones, or pardon me, which ones have value and which ones merely have small but deservedly small market caps.
Yeah, yeah. Okay. All right, jumping right into it. James wants to know, do you follow Thungela? Is Africa, it's coal out of Africa?
Not well enough to comment. I try to constrain myself, particularly around coal stocks, to companies that are in the lowest cost quartile worldwide and the best returns on capital employed. There are a lot of coal stocks that do well in periods of reasonably high coal prices, but I'm looking for the last man standing.
Okay. Conrad is asking about Deep Yellow. He says, based on its leadership with a long track record, should they benefit a lot from the change of structure of the market to the term market?
That really depends. The leadership that the questioner refers to, John Borshoff, is unquestioned leadership. Uh, we need to see evidence that John is willing to take advantage of the term market. Thus far, it appears as though he has been led really by the uranium bulls, who don't want to enter into term contracts so that they preserve the optionality, the leverage to upside share prices. From my own viewpoint, locking in 60 or 70% of your production so that you ensure profitability and then playing the spread if you want to with the remaining 30% is a good strategy. I have a very, very high regard for John Borshoff. He was good for my reputation. He's also a very, very good friend of mine. But he played the game at Paladin very, very, very hard. He added too much debt, thinking it was cheaper than equity, almost bankrupted Paladin. And by the way, believed his own cooking enough that despite the fact that he got 1,000-fold increase in the share price, he personally didn't make any money. I, you need to watch John. He is a wonderfully talented human being who absolutely believes in what he does. But for me personally, Steve, you can take away some of my upside if you take away most of my downside. And entering into term contracts, particularly term contracts with escalations and floors, is, I think, the best way possible to play this game.
Okay. So he locked in 6 out of 10 pounds is what you're saying, knowing what that's going to be and kind of left
No,
the
he
rest?
he did not. That's what I'm encouraging him to
Oh,
do.
okay.
He
Okay.
isn't taking advantage yet of the prices available in the term market. He is gambling that prices will go higher, and that he can sign either that he can proceed unhedged and enjoy the full market escalation that he sees, or that spot prices will increase, which will allow him to get better terms in the term market. I personally, given the financing he's going to need to put those projects in production, would rather see him lock in term contracts now, which will enable him to get the financing that might otherwise be difficult.
Yeah. Okay. Okay. We also got some questions on the Silvercrest and Core merger, and more of a what do you generally do when you have a merger like that, where you're holding one company and they get bought out by another, they combine? What are your thoughts?
No one size fits all. I try to construct a rough financial model of the surviving company, and I try to see if what I see as the net present value of the combined entity is higher than the market cap. If it appears cheap, I buy it. If it doesn't, I sell it. People are always looking for one size fits all answers to fairly complex financial questions, and there aren't any. The game is always the same. Money is made on the delta between what something is selling for and what it's worth. If you don't have an opinion as to what it's worth, the information around what it's selling for is sort of meaningless.
Buy undervalued and sell overvalued.
Correct.
Okay, Christoph is asking about nickel. He says recently there was some information about nickel supply constraints in Indonesia. In the 3 to 5 year time frame, does Rick find nickel market interesting?
I do. I believe that lateritic nickel supplies from Indonesia will continue to grow for the next year and a half. Then I believe that they'll taper off. And I believe that the cost of producing lateritic nickel in Indonesia will increase fairly rapidly, because I think the Indonesian government, and in fact the Indonesian people, are going to enforce much higher environmental standards than they're enforcing currently.
Okay. Where was it? Capital structure. Okay. Can Rick give some hints on how to analyze the amount of warrants in the capital structure in relation to the shares outstanding? When does it become a red flag from the perspective of common share investor buying in an open market?
I suspect that part of that question is better answered by a trader than I. I pay attention to absolute valuation. I own warrants because I'm contributing capital that will answer an unanswered question. I try to assign some probability to a yes answer, and I try to assign some value to a yes answer. Also, the nature of the warrant has a lot to do with the answer. In the case of a warrant where there is a fuse, which is to say, if the share price of the company exceeds a certain minimum for X number of days, then the warrant holder has 20 days to use it or lose it. That, in fact, can put the cap, a near-term cap, on the share price, and traders need to take that into account. Given that I'm an absolutist investor, that what I care about is the difference between price and value, I don't care too much about the trading impacts of warrant issuances on share prices.
Okay. Philippe is asking Dakota Gold. So they were out at the New Orleans Investment Conference. We've got you've got is it Bob Quartermain? You're doing a Q&A with here soon. Maybe give general thoughts on Dakota Gold and that upcoming event.
I think it's going to be a fascinating due diligence. Bob Quartermain, who was sort of the financier of Dakota Gold, has now taken over as chief executive officer, in this case, putting his mouth where his money was, as opposed to the other way around. I have been investing with Bob Quartermain for a very long time and have enjoyed really, truly spectacular results. I'm also interested in the thesis that there's a lot more gold to be found around the confines of the Homestake mine. I have had questions myself as to valuations with Dakota Gold, although I am a shareholder of Dakota Gold. So I look forward to questioning Bob about Dakota Gold. I look forward to it both because I'm a shareholder of Dakota Gold, but also because I think it's a wonderful educational exercise for people in the rural classroom. Make no mistake, this is not a paid for commercial by Bob Quartermain. This is really me giving Bob the opportunity to keep me in place as a shareholder and perhaps increase the size of my Dakota Gold position. At the same time, this is a wonderful chance for people in the rural classroom, particularly those people who have paid attention to the instructional videos on valuation, to see how this works in real time. You'll see it work in real time on a person who has been serially successful and is known by myself to be dead honest. You can take Bob Quartermain at his word. That isn't to say he isn't a promoter. He will certainly put the truth in its best possible light. But I've known Bob for over 30 years. He will not lie.
I did
Hey, Rick.
Oh, go ahead.
Yeah, that's an interesting subject actually, maybe to get into sometime, is how these due diligences differ when you have a friend on the other end of several decades. And to that point, speaking of friends, I want to bring up a question from Christian, who says, Rick, you have previously praised Ivan Bebek, and we've all listened to you on the importance of good management. Have you had time to look at the initial drill results from his Sombrero project? Do you see anything there that excites you?
Thus far, I haven't seen anything at Sombrero that leads me to become a shareholder. I have a lot of time for Ivan in that he has developed a very, very, very good funding constituency, and he can raise money for exploration in markets when other people can't. He has also done a very good job over time of hiring very good technical people, which is evidenced by the success that he's enjoyed at a relatively young age. That being said, thus far, I don't find the exploration results encouraging, particularly in light of the expectations that he, with his own adroit promotion, caused the market to believe.
Okay. Just a heads up, guys, we are pulling the questions from the Rural Classroom Plus. So if you're watching this on YouTube or another outlet, that's where we're pulling them from. And Mining Stock wants to know, he says, hey guys, thanks for the live stream. I'd like Rick's opinion on what he thinks about the Altius arbitration. Does he think that they will win the arbitration and expand their AOI? Any insight on who the winning bidder will be? Is there a secret dark web that you know about here, Rick? Any insights?
Sadly, my law degree comes from the School of Hard Knocks, and I have learned not to trust myself with regards to legal outcomes. I watch it with interest, but I have no opinion whatsoever. I also believe that the long-term valuations of Altius are compelling enough that I don't need a win, that a win will certainly be icing on the cake, albeit an awful lot of icing.
Okay. But I got to imagine that's going to be a pretty quick re-rate, probably overnight for Origin, right?
That will depend on, of course, how the court sees it. I note that Altius continues to be in the market for Origin shares, which tells you a lot about Altius' opinion of the size of the deposit.
Yeah. Okay. All right. Let's see. Are you familiar with Sol Gold?
Sol Gold.
Yeah.
Indeed, I am. I'm no longer a shareholder of Sol Gold. It gave me everything possible that I could hope for in terms of share price escalation. Long-term followers will remember that prospect was generated by a prospect generator where, when I was at Sprott, we were the largest shareholders, meaning that we got a bump, then we got the prospect generator taken over by Sol Gold, then we got escalation in the Sol Gold share price. The escalation in the share price of Sol Gold that we got was sufficient that we sold the stock, not because we didn't believe in the porphyry, but because the timing of production was such that we actually couldn't do a net present value calculation. There were so many things that we didn't understand about the permitting process, about their ability to finance the project, that sort of thing, that we couldn't construct a financial model because we had no start date. Given that on some of the position we had a 10 or 12 bagger, it seemed like the prudent thing to do is take the cash and ride off into the sunset until there was more certainty around the start date.
Okay. Sean wants to know, could you share more details about your oil and gas thesis? As you stated, Warren Buffett is not purchasing more shares of those. What is it we could be missing?
It might be that Buffett is right. He certainly bought the stuff when it was deeply out of favor, and it is not as deeply out of favor anymore. You'll recall that Buffett began building his Occidental position during the COVID crisis, when the oil price was 2/3 lower than it is today. The question Buffett asked himself was, would the price of oil return to the cost of production, including the cost of capital, or would nobody's car start? That was fairly simple. That question has been answered, and he's made billions and billions and billions of dollars on the answer. My thesis is somewhat longer term. It appears to me that the net present value calculations around oil and gas producers has to do with terminal dates at 2030 or 2032, which is to say that they are cutting the tail off all the net present value calculations on oil companies as big as ExxonMobil. My belief is that peak oil demand occurs around 2065, is around 2030. So I'm valuing the cash flows according to traditional models, particularly with regards to residual values. And the market is doing things very differently. It's worthwhile noting, by the way, with regards to Mr. Buffett's allocations of capital, that his cash levels relative to the net asset value of Berkshire Hathaway are the highest that they've been in recorded history. He says that this is not a strategy. He says that this is occurring as a consequence of the fact that he can't find adequate places to put the money. In other words, he's not calling a market top. He is saying that he is incapable of finding silos that are big enough and attractive enough to hold the money. That may be the same thing.
Yeah, that's
it may be that if you're as big a market participant as he is, the fact that there are no suitable opportunities for you means that the market is overvalued, although he is not saying that. He's saying the opposite.
Yeah, he last I checked a couple days ago, and Berkshire Hathaway is worth 1.04 trillion, and I think his cash position was north of 300 billion. So he's over 30%.
That's correct.
That's a lot. Okay.
Steve, I got to get in here with a question from Helen Shee. Rick, her question is about Entree Resources. Apparently owns part of a copper deposit next to Rio. And she wants to know, she says, Rio apparently discussed it in the recent shareholder meeting, and speculation is that they have to buy it. Do you think Entree is currently undervalued?
First of all, I am a large and long-time shareholder of Entree. I've actually had to sell a little bit of it because it's done so well that it became a disproportionately large proportion of the rural segregated accounts sold through Sprott. I didn't sell it because I wanted to. I sold it because I had such a large position. As Rio Tinto points out, the mineralization is extending north across the Rio leases onto the Entree leases. Whether or not this results in a buyout by Rio of Entree is speculation. There is no doubt in my mind, absent a global recession or depression, that craters copper prices, that Entree 5 years out. Notice I didn't say 5 weeks out, 5 days out, or 5 months out. 5 years out, Entree is likely worth a multiple of the current share price. And it isn't worth that based on some far-fetched exploration theory. That's based on the fact that the highest grade part of the Oyo Tolgoi deposit, which is currently being exploited by Rio Tinto, is moving north onto the Entree holdings.
Okay, I want to follow up a question from David. David says China has banned the export of rare earth minerals. Rick, do you have any thoughts on this?
Yeah, I think it's global saber rattling. I think it's silly. I'm delighted to see it happen. Not for mankind or for China or for the United States, but rather for me. I have been investing in rare earths, non-Chinese rare earths, for a substantial period of time. And it would seem that the combined idiocy of the West and China may conspire to make me a whole bunch of money. Normally, circumstances like this don't work. And my suspicion is that the Chinese are sophisticated enough that this is mere saber rattling. It might be that they're not. It might be that the Chinese understand that they have a 5-year lead in rare earths. And what they would prefer is to sell us gadgets fabricated by them from rare earths that they control. If that's the case, you are going to see a boom in rare earth advanced exploration projects and development projects on a global basis. Whatever happens, you will see the price of rare earths increase, not because of geopolitics, but rather because both the Chinese government and the Chinese citizenry are becoming less tolerant of the hideous environmental practices that have occurred in Western China in terms of the exploitation of their rare earths resources. The mining practices that have occurred in the past, and especially acid washing, are really techniques that don't have any place in this century. And mercifully, I think they're being discontinued, which will lead to fairly rapid cost increases in Chinese production.
Rick, if the ban continues, as you said, and that kicks off a wave of investment in the sector, that seems like a trap, a potential trap, right? Because if the policy reverses, all that capital is deployed and stuck. That seems like a trap.
The Chinese did that once before. Whether or not it was geopolitics or common sense is a different question. But the Chinese sort of waved the supply red flag. All kinds of people rushed into rare earth commodities that they couldn't spell or pronounce. The Chinese backed off, cratered the market for rare earths, and there was several billion dollars in exploration and development expenditures that were crushed. You may remember, Albert, the Mountain Pass deposit in Eastern California. You probably drove past it on your way from San Diego, California, up to Las Vegas. That deposit went from bankrupt to a $4 billion market cap to bankrupt again in the same cycle I just described with regards to the Chinese playing volleyball with rare earth policies.
Okay, I want to move on. I got a couple more questions here. Ricardo wants to know about your thoughts on Aya now that the price has come down.
I always like lower prices better than higher prices. They delivered a bad quarter, make no mistake. Mining companies have a habit of doing that once every couple of years. I have a lot of time for Benoit LaSalle. I will say that the share price of Aya assumed that there would never be any bad news ever. And he had a lousy quarter. Let's get to that. I watched Benoit for 15 years build Semifo, and I suffered through the odd bad quarter. But when I look back to the suffering I endured relative to the profits I made, the suffering wasn't too severe. For those people who aren't familiar with Aya, the fact that there's a share price decline gives you a much better opportunity to review the company and utilize the lessons from the Rule Classroom to determine whether or not this is a suitable speculation for you. I would also ask people if they have the availability, Albert, to replay the interviews that you and I have done with Benoit LaSalle, which I assume are in the Rule Classroom, or if not, at Rule Investment Media.
Yeah. Just search Aya in Rule Classroom. Rick, Michael has a question for your opinion. Uranium Energy versus Uranium Royalty. This is an overlapping team, but different business model. What are the considerations?
I think it has to do with your risk tolerance. If you are a risk-oriented investor and the uranium price continues to do well, you will likely do better in the near term with uranium energy. Uranium Energy has spent 25 years putting together a portfolio of projects that can be brought into production. The pricing and the financing is in place to allow them to do that now. They will need to take risks, particularly because the market has asked them to remain unhedged and not take advantage of term markets. Uranium royalty, by contrast, doesn't have any capital contributions to make, which means that you take away an awful lot of the risk. For uranium bulls and people who are aggressive, I think in the near term, you probably stand a better chance of making money with UEC. You deserve it because you're going to be taking more risk. It looks as though they want to put 4 different projects into production, and I haven't seen much with regards to the sequencing. There are several risks with regards to this. One of them is that in the pursuit of too much growth, you foul up a couple of the components. So for uranium bulls that are more risk averse, uranium royalty, certainly, because your gross is your net. For people who follow the uranium thesis, particularly the domestic uranium thesis, the fact that domestic producers have gone in 6 years from being vilified to being subsidized, UEC may be the ticket.
Okay. Just got a quick hello from our friend William Lambert from the coast of Cuba. Hello, William. One more, Rick, and then I'll throw it back to Steve. And this is from Sylvia. She asked, can Rick share his thoughts on newfound gold?
Great promoters, lots and lots and lots of surface data. I can't tie the drill holes together. I don't see 1 or 2 big deposits. I see a bunch of lenticular deposits. Given that I see that, I can't construct a good enough financial model to own the stock. I have a high regard for the people, and I could easily be wrong. My past partner and mentor, Eric Sprott, who I have a huge regard for, owns a whole bunch of stock. I don't own any.
Okay, Connor and several other people are asking about Core. So what are your thoughts and rankings on Core Mining after the merger?
I don't own Core. I think that the merger provides Core needed breathing room with regards to free cash flow. They paid up because they needed the cash and because they have net operating loss carry forwards to shelter the cash, which means that the money goes to Core as opposed to the tax man, which I always applaud. This mine has a fairly short indicated mine life if they aren't able to drill off more reserves. So the question is going to be, can Core redeploy the cash that they receive from the Silvercrest asset fast enough that when the current reserves and resources deplete, value will be created? I did own Silvercrest. I looked at the combined model of Core Silvercrest, and I sold. I needed more data with regards to reserve life than is available.
Okay. Yeah, I went to their presentation out at New Orleans, and it was pretty much just you had breakfast and they couldn't talk about the merger, and that was it. So we didn't learn a thing. They gave us all a silver coin. I kind of felt like they were bribing me with my own money. Okay, Luis and a few other people want to know about Longcore Gold. I haven't heard of them. Are you familiar with them?
Yes, I am familiar with them, and I need to say I don't know enough to comment. They are exploring what appears to be a very promising concession based on existing data in Northeast Congo, which is a wonderful place to look for gold. Long-term associates of mine will remember with some pleasure the money that we made on Motogold, the Kilomoto gold fields prior to its takeover by Barrick and Anglo. My hope would be that Longcore repeats that, but I need to say I haven't done enough work to comment.
Okay. Andrew is curious about the Greenstone project from Equinox. Thoughts on commercial production at Greenstone from Equinox? Seems like they will be focused on paying down debt.
Yes, indeed, they'll be focused on paying down debt. Before they do that, they need to get Greenstone to nameplate capacity. They have, quote, economic completion, which is to say they don't need to spend more money on the mine or the mill, but they need to tune things up. It's often the case, well, almost always the case, that when you bring a big mine like that into production, you need to debottleneck the mine and you need to optimize the mill. So it's important to note that while they have achieved, quote, economic completion, they have not as of yet achieved nameplate capacity. Once they do that, they are going to have to pay off a mountain of debt. If the mine operates as they suspect it will, which is to say, as the feasibility study suggests it might, remember that the feasibility study was done at $1,700 gold. The financial performance of the mine at $2,500 gold should be, notice, Steve, I said should be substantially better than the financial performance that was predicated on $1,700 or $1,750 gold. That being said, there's over $1 billion worth of debt to pay off. And while they were building Greenstone, I think it's fair to say that they probably scrimped on sustaining capital investments other places in their portfolio, which has resulted in some of their other operations generating all-in sustaining capital costs that were substantially higher than had been predicted by the company. If they make Greenstone work, and I believe they will, I know this mine building team, it will spin off a lot of cash. But that cash likely won't see the light of day for 2.5 or 3 years while they repair their balance sheet and deal with sustaining capital investments in other locations. It could be, it has been suggested, and by the way, I suggested it to Ross Beatty in London last week, that as a consequence of completing Greenstone, some of the secondary assets that they used to build the company could be sold. It is consistent with Ross Beatty's efforts over time that you build a company on smaller assets. As you lower your cost of capital and acquire higher quality assets, you sell on the lower quality assets to other people, repairing your balance sheet while at the same time leaving you to lavish more care and attention on your higher quality assets. When I mentioned this to Ross in London, he didn't say anything, but he did smile.
Okay. All right. A few questions on Mali. Chris is, I think, sums it up pretty well. Mali, one of Africa's biggest gold producers, has issued an arrest warrant for Barrick Gold for Mark Bristow. Would Risk sell on news like that, or is this business as usual?
Yeah, it's extortion. It's what governments do. It's just that Mali is more forthright about it than the United States or Canada. I'm actually trying through a couple of friends of mine to arrange an invitation to meet with officials from Mali, Niger, and Burkina Faso at PDAC. I've learned that if I get invited, I get a better meeting than if I try to invite myself. So I'd like to learn a lot more about these now governing resistance movements from West Africa and learn just exactly how they view foreign investments. I found that meetings like this in the past have been very illuminating, both in terms of good news and bad news. So I'm hoping that I can meet these folks at PDAC. If they say that they'd be happy to meet with me, but that I'd need to go to West Africa, I'd probably be willing to do that. I would be amused, I think, at those sort of meetings. I remember many years ago in the early 1990s, traveling to Cuba with Doug Casey and meeting government officials. And I have to say, it was one of the most interesting experiences in my life. And I wouldn't mind doing that again in West Africa.
Oh, so this is, you've done this before. You've gone and met with, okay.
Absolutely. And it doesn't always work. Usually if I go in through the front door, the meeting is perfunctory and stupid.
Okay.
But usually if I'm introduced by somebody who knows me and knows them, and there's some suggestion that I have some measure of influence in the mining investment community, I can be invited by these same government officials, and I get treated much better if they invite me than if I invite myself. May or may not work this time.
Wow, I would love to be a fly on the wall for that. My God, that would be awesome. Okay, Ryan is asking about, okay, so he knows your formula for uranium bet for the retail investor, 50% Sprott Physical Uranium Trust, 50% URNM, and then go fishing. He's saying, what's the second best vehicle to ride the uranium bull run?
I just buy Cameco. I buy the very best.
Okay.
Uh, they have a lot of what they would call mineralized inventory that other people would call ore. They're fairly conservative in their accounting. They have also exhibited real discipline with regards to not returning mothballed projects to production until they had entered into long-term sales contracts. If you want to go farther down the quality trail and you can stand the absurd levels of G&A spending, I think you look to NextGen. There are lots of things about NextGen I don't like. I'm not sure why a uranium developer would sponsor Formula One racing, as an example. But it's clearly the best undeveloped uranium deposit that's known about in the world. My former top pick, Kazatomprom, is troubling to me, not merely because they've missed production targets, particularly at Inkai, but more importantly because of the incredible turnover of middle management, some of whom were known to me, and some of whom I had a very, very high regard for. 3 years ago, I would have suggested to you that the management team at Kazatomprom was superior to the middle management team at Cameco. That's no longer the case. I'm not sure as to the reason for these departures, although I suspect it might have something to do with Kazakh politics.
Yeah, I sold out at Kazatomprom, I don't know, a few months ago or something. It was like 19 of their management's positions have been, just a rotating turnstile in something like 4 years. I mean, it was,
Yep.
yeah. Anyhow, okay. Han wants to know your thoughts on Go Gold.
I'm a Go Gold holder. The stock has sold off a lot because of fears that the current president of Mexico will not allow open pit mines. That is not what she said. She said that she will not permit open pit mines that don't have local community support. Go Gold is hoping to exploit their deposits, their camp really, it's more than one mine, it's a camp, by both open pit and below surface operations. Their exploration results have been spectacular. And in my experience, while it isn't always the case, it is often the case that when drilling becomes predictive, which is to say, when management proposes a thesis based on their existing understanding, and that thesis is confirmed by drilling, that you are in for a period of fairly rapid resource and reserve increase, which is where I think we are with Go Gold. Understand there's political risk. The Go Gold people are very active in terms of community relations. And it is arguable that from the community's point of view, the best possible economic development strategy that they could have would be gold mining. It tends to pay better than subsistence farming, which is what the competition is. So I hold out the hope that Go Gold will be protected by the local community, and as a consequence of that, will achieve their permits on a timely basis. Meanwhile, I'm encouraged by the exploration results.
Okay. Stefan wants to know comments on the junior royalty companies, Gold Royalty Corporation. They should have some good cash flow here soon, right?
They will have good cash flow. They have a fairly formidable market cap, but they also have a very deep royalty portfolio, and they have an interesting proactive strategy, both with regards to creating royalties, a prospect generator model, but also participating in the capital stack, often helping to arrange financing of companies that hope to beneficiate the royalties that they hold. This is a sister company to Uranium Energy and Uranium Royalty, which is to say it's ultimately an Amir Adnani company. And I regard Amir Adnani both as an extremely formidable promoter, lowering his cost of capital, but also a very astute businessman. My criticism of all three companies is that their general and administrative expense remains quite high.
Yeah.
Part of that, of course, has to do with their promotional efforts, which lowers their cost of capital. So in some senses, the high G&A explains itself away with their high relative market cap compared to their peers and their excellent access to cash, including during periods of market decline.
Okay, and Aram is curious about, probably because Bitcoin just hit over $100,000 per Bitcoin. He says, I've never really heard Rick express any ideas on Bitcoin. Would love to hear his take on it from the point of view of his understanding of Austrian economics.
I don't have any opinion about Bitcoin. I'm maybe unique among speculators in that I have no fear of missing out. It is fairly easy for me to make mistakes in subjects I know a lot about, like conventional financial services, mining, and oil and gas. And I see no need to extend my ignorance to other topics. I don't really understand the value proposition of Bitcoin. I mean, I understand the network effect. I understand anonymity. And then I look at people who are long Bitcoin saying that there would be greater institutional adoption if the Bitcoin was regulated more, which I guess takes away anonymity. What I'm saying is I don't understand the value proposition. And not understanding the value proposition means that I can't personally buy the asset. If I don't own the asset and I have no hope of owning the asset, the idea that I would waste time studying it relative to asset classes like mining, oil and gas, and community banks that I feel like I do understand, it just seems like a waste of time for me.
Okay. This is an interesting one from Philippe. He says, maybe you could just go over, you call them penny stock dividends, I think is what you call your tax loss selling. Maybe just kind of give us an overview of how you approach that at the end of the year.
Yeah, the expectation on most speculations, particularly exploration speculations, is a loss. And when you own a stock for the reason to own the stock goes away, the stock should go away. You should sell it. Hope is not an investment strategy. Even in circumstances where the jury's out, which is to say you don't know what the outcome is, but you're down 35 or 40% on the stock, what I do in those circumstances very often is sell the stock, harvest the tax loss carry forward to apply against gains. Mercifully, this year I have a lot of gains. And then after the wash trade period, 31 days, I think about buying the stock back, but I think about buying the stock back with a fresh mind. My decision isn't impacted by the fact that I own the stock and I'll take a loss selling it. I already did that. And I found that this has worked out for me very, very, very well. Okay. Harvesting tax losses, using the tax losses against gains that I'm already liable for, results in a net economic benefit to me right away. Then revisiting the value thesis, unconstrained by the fact that I own the stock, also, I think, allows me to look at the stock with fresh eyes and make a better decision.
And when you do that, sorry, Albert, when you do that, if you did it on December 30th, you got to wait until 31 days later, right? Or does it have to be complete and make the decision before the next year?
Oh, no. You have to wait 31 days if you're a U.S. holder. I don't know what the number is in Canada.
Okay.
In order for the sale to be utilized for tax loss purposes. And I very much make the sale with the view that I will review the situation later. But in my own mind at the time, the sale's final.
Okay. All right, cool.
Rick, question from Jake. He'd love your thoughts on Dryden Gold. He said he had a chance to talk to them in New Orleans, and he liked the team. This is the team from Ely Gold, right, Rick?
Yes.
Our friend. So what are your thoughts on that project and that team?
There isn't enough data on that project that would allow me to own it. I have to say I haven't studied it very thoroughly, but their past success was intriguing. Nevada is, of course, nice, but there's not enough data for me to make it a compelling buy. I have to say I haven't reviewed it particularly thoroughly because at first blush, I didn't see anything that inspired me to continue to review it.
Jake, he came by the booth many times. What's up, man? How you doing? He brought up something that was interesting. It was graphene. I asked Albert about that. Have you ever followed graphene, Rick?
I'd rather that you asked Albert. He has a technology orientation, and I'd rather that he exposed his ignorance as
Yeah,
opposed to me
no
exposing my
chance.
own. I've
No
noticed for the
chance.
last 20 years, what graphene is particularly useful for is selling investment newsletters. I haven't seen anybody make any money on the stuff as a substance, but I've seen several newsletter publishers at various times mount extremely successful subscription drives.
Okay. Okay.
Hey, Rick, I got a question about your comments on Entree.
Yes.
You said you were sort of a reluctant seller. Was that a constraint that was built into the investment vehicle, or is there a rule that you follow personally in terms of how big you're going to allow a position to get relative to the rest of the portfolio?
No hard and fast rule, but we had a big position in Entree and it grew. And what happens is that all of the new people who come into the rule segregated managed account, the account rebalances. And it became a self fulfilling prophecy. And I was afraid I was becoming the market. So I
Right.
decided to reduce it as a component so that future investors, if any, so that I wouldn't be competing with myself.
Makes sense. Question from Ralph. Rick, any thoughts on the funding of I-80 Gold following their restructuring plans?
Oh, it's going to be ugly. When I look at the balance sheet, rough numbers, it looks like they need $150 million. And I don't know what form that will take place. I'm part of a group that is forwarding a funding proposal to them. And I would say it reflects the current market and it reflects the fact that they're in the penalty box.
Okay. Let's see. Zolt says, best opinion on Bitcoin. I'm the same. No FOMO here. Diane, apparently it is 31 days in Canada. So thank you for that, Diane. Rick, Steve, Albert, excellent discussion and insights today. Thank you. Thank you, Ted. Okay. Steve wants to know, he says, Energy Fuels just announced Madagascar is allowing the project to go forth. Do you have any comments?
I don't know the project well enough. For those who don't know, Energy Fuels has a mill at Blanding, Utah that can process uranium waste, and is being reconfigured to process certain rare earth oxides. The Madagascar deposit is a rare earth deposit. It's a deposit that I don't know enough about to comment on. I'm always a bit concerned about process and technology, given the fact that I don't understand it. And my ability to forecast their ability to process rare earth materials through the Blanding mill isn't sufficient that I would like to burden members of the Rule classroom with it.
All right. A copper project. Tristan is curious about. I got to sit through their presentation at your symposium with Christian Easterday. Hot chili. Any progress there?
None that I'm aware of. Hot Chile, well, a recent acquisition of yet another porphyry cluster, I think helps increase the scale, but the scale is already magnificent. It's already a very, very large deposit. It's already well located, close to the Chilean coast, close to infrastructure. What's missing is a starter pit. What's missing is a high grade core where you can recover capital. They have an interesting strategic initiative underway around their aquatic licenses, the ability to desalinate salt water. But this, like the copper deposit, thus far, is promise. In order for this promise to be turned into progress, you're going to need a funding joint venture partner on the water, perhaps BHP. By the way, that's not a forecast. And you are going to need to identify a high-grade starter pit. The overall returns on capital employed aren't bad, but the recoupment of capital, given the extraordinary upfront capital cost and the extraordinary size of the deposit, means it's going to be difficult for a company the size of Hot Chile to move that project forward unless and until they drill off a high-grade starter pit, which as of yet they have not done.
Okay. Getting close here. We'll take a few more questions. Also want to remind you guys, we got Boxing Day special coming up December 26th. We're going to be, Adrian Day is going to be hosting from 10 a.m. until noon. And I'm going to take over at noon. And we'll be taking your questions, doing presentations. It's going to be a lot of fun. So make sure you set your calendars for that. Got some more copper questions here from Alan. He's asking, do you see McEwen Mining's Los Azules project in Argentina as a tier 1 deposit?
Potentially tier 1 deposit. Certainly tier 1 deposit with regards to size. Zero doubt. I'm going to need to see, remember that my definition of tier 1 has to do with more than size. It has to do with financial performance. Thus far, the work needs to be done in terms of the ultimate all-in sustaining costs and also the return on capital employed. Remember that for me to be a tier 1 deposit, they have to be in the lowest cost quartile worldwide in terms of all-in sustaining costs and the best quartile worldwide in terms of return on capital employed at current commodity prices. Or at any rate, return on capital employed at the feasibility stage ahead of 25%. And we don't have those numbers on McEwen yet. Note that Rob has been a friend of mine for a very long time and made me an awful lot of money on Goldcorp. So I'm inclined to want to believe. But as we said earlier today, hope is not an investment strategy. I need to see the numbers.
At what point do you, cross it over from, like, for example, Banyan? It's all inferred. When do you say, okay, this is tier 1?
Well, with Banyan, I'm likely to need a bankable feasibility study. There's a lot of, as you suggest, inferred gold there, but there's no economics wrapped around the inferred gold.
Okay.
So I don't know where the AISC will fit in. I don't know where the return on capital employed will fit in. It's difficult for me to construct a mine model. There are times when the gold endowment is easy enough to understand and the market capitalization is low enough that you do some of your own inference, which is to say, if the company is selling at 20% of indicated NAV with reasonable assumptions, you take a shot. I'm not there with Banyan yet.
Okay. Let's see. We got Hot Chili. And any thoughts on Sibanye-Stillwater, their PGM miner down in South Africa?
Too complex for me to comment on. I am a bull on platinum and palladium. I'm a bull on platinum and palladium partially because I think the political and social circumstance in South Africa gets worse, which is where they're producing. The situation there is very complex. They're trying to cure the sins of apartheid by outlawing private property. Sibanye-Stillwater doesn't want to make the capital improvements in their mines that they require because they don't know if the gain will be taxed away or who ultimately will own the mine. So the mines are undercapitalized. The labor, because the labor doesn't employ much capital, is fairly inefficient. And so the labor is priced to utility, which is to say underpaid. The workers need a pay raise, absolutely positively, and Sibanye-Stillwater can't afford to give them one. Stuck metaphorically, I guess, between a rock and a hard place. For that reason, I don't own Sibanye-Stillwater, although Neil Froneman is somebody who I've known not for 3 decades, but rather for 4. And I hold in very high regard. He has a very difficult job, one I'm delighted that I don't have.
Okay. And are you familiar with Ero Copper? ERO Copper?
I am.
Okay. William is curious on that one.
I currently have Arrow at a 5. It appears as though they have a second project to put into production, and it appears too that they will be able to upgrade their current project. I know the management team well. I've known them for a very long time. They were associated with Ross Beatty's success over time, and they did a wonderful job buying an asset from Glencore that Glencore didn't see the value in, and showing the market the value that was inherent in it.
Okay, we got time for one more question. Here's a statement from Ash. She said, thought it was talking about sport boxing. No, Ash, Boxing Day. Okay, Han says, Han, hi, Rick. could you comment on Sovereign Metals' latest news about the completion of the mining trial?
Yeah, it was basically good news. The mining trials and the processing trials confirmed on a very preliminary basis the flow sheet that the company has suggested would be employed to beneficiate the deposit. But I want everybody here to understand that there's a huge, huge, huge difference between a bench scale test and a commercial mine. There are things that you can do at the 25-ton scale or the 100-ton scale that go seriously awry at the 5,000-ton scale. So yes, this is encouraging. No, this is not definitive. Note that I am way, way, way long the company.
Okay, I think we're about ready to wrap up here. Just want to remind everyone we got a live Q&A again with Rick a week from today with Albert. Same bat time, same bat channel. And then December 19th, we will be doing the Q&A with Rick and Robert Quartermain. And then the 26th, we've got the Boxing Day live stream. So really excited for that. You guys have any final thoughts?
Steve, do you think we confused all of our U.S. viewers with the Boxing Day special?
Maybe we did.
No, I think we did. This is like just the consequence of having Adrian Day on the team. He said to me, Albert, you don't even celebrate Boxing Day. So just to prove to him that I do, I made it a Boxing Day special on December 26th.
And
Live
Albert,
stream.
why don't you, given that you're a resident Canadian, why don't you tell the American viewers what Boxing Day is?
No, I can't because I learned it at one point. I quickly forgot. I hope Adrian's not watching. It's an artifact that still remains in Canada, but we do not celebrate here. Rick, jog my memory.
My understanding, and as you know, holidays, including Christian holidays, are not something I'm particularly good at. But my understanding is that Boxing Day was a British tradition imported to Canada, and it was the day that the domestic staffs had off to be with their families after serving their employers on Christmas Day. So
That
the second
makes so
day,
much
the 26th, would be the day that the domestic staffs were able to celebrate their own Christmas after their duties to their employers had been discharged.
Okay, that makes sense. Yeah. Okay. Boxing Day.
Yeah. So I was right. It's an anachronistic artifact left over from the Empire, but nevertheless, it's going to be fun. We have a lot of guests planning to join us. Rick is more popular than I thought, so I'm looking forward to that. And also Robert Quartermain next week is going to be just fantastic. So look forward to that. Guys, thank you very much. Excellent job again, Steve. Rick, always appreciate your time on these. And thank you to everyone who joined us today from YouTube or Twitter or LinkedIn. Appreciate you guys joining us as well.
Steve, Albert, thank you both.
Yes, thank you guys. This is always a pleasure. I enjoy it.
All right. Take care, everyone.
Bye-bye.